Okay, welcome everybody. Welcome all our penny stock billionaires 2022, our first live stream of the new year. I'm actually, very enthusiastic about the new year and what's ahead. I think we're gonna have some really, really exciting things happening over the next 12 to 18 months. We really can't. I know everybody puts things into like this, these categories of, 1 year, 2020. I think really it's going to be a period of about 18 months. So this is going to be a stretch starting right around now. It may have started a little bit earlier, but I think we're very, very lucky to be living in this time. I mean, I don't want to sound like, some like, sappy, one of these people on the internet talk about, oh, things are great, but no, really, we're actually very lucky to be living in this time in history. There is some real incredible convergences of technologies, innovation, a lot of things happening right now. Very similar to, kind of like that first. We had a couple of waves. Well, in my lifetime, that I know that which I would recognize as in my adult lifetime, I would say that I would recognize as important waves. You had probably in the mid '90s. You had this is before the internet. You had like Windows 95, Intel. You had that kind of when really home computers became much more mainstream. You had early AOL, and then of course you had the internet really start probably in right around that time, like 97, 96, 97. So you had that kind of, but these things, they all took a while. And, that you had that was your dot-com wave that started right around, 1996. Then you had your social media wave that happened in, I would say that would be kind of like Web 2.0, which was Facebook, MySpace, all that crap that started like in the mid 2000s, 2006, circa. Although I would not really consider that I would not consider that real innovation. That was more of like incremental type stuff. It wasn't anything like oh my God, mind-boggling. But what's happening right now, like there is a bunch of things happening right now, which are really gonna could flip things upside down. Like you have, what people are describing as Web 3.0, and we're not really sure what exactly that is. It's part of it is like this metaverse thing. Part of it is decentralization, blockchain. You have all these things kind of converging. Then you have the cryptocurrency thing happening. There's a lot of really incredible things. And I think they're all going to come together in the next, they're coming together right now. They might have already come together, but I think we're going to see the real things starting to happen in the next couple of months. We're going to start to see some really exciting things. And that's going to have a major impact on a lot of our stocks. I got to tell you also, it's interesting. It's a new year, and I've had an epiphany, which is, I've always said, the Bitcoin, it's a scam, it's fugazi. It's just, I've come to, I've had a change of mind. I think it's basically, I think it's here to stay. I think it really is here to stay. And, whether it's going to be in this form or whatever, but like in terms of, the Bitcoin, there's something about it, which I think is there's a sense of reality to it, which could be, what, I hate to say it, but look, it's about as real as the US dollar or, fiat currency. I don't want to sound like one of these crypto people, because again, I'm not drinking the Kool-Aid. but I can kind of get into later, maybe like why exactly I think this thing has got some legs. But what I think is going to happen this year is really the mainstreaming, kind of the crypto thing becoming mainstream. Because think of it this way, I got to kind of look at it from the big picture. Is if a guy like me all of a sudden, like, I mean, and again, I've been kind of vaguely following of the crypto thing for a couple of years. I'm not a fan of it because I really I don't think it's in terms of I guess philosophically I may have been opposed to it because it doesn't really produce anything. It's kind of like people are investing in it. Like, who does it really? What is the benefit? How does it benefit society? I mean, if somebody's trading crypto, I mean, what are they really doing to benefit? I don't really think they're either creating a liquidity. It's very abstract. Whereas, if somebody's trading, let's say, even penny stocks, at the end of the day, penny stocks, it benefits society because when you create liquidity in emerging growth companies, whether you're talking about penny stocks or whatever it is, it creates look, it creates innovation, it finances innovation, it creates jobs, it creates the economy, everything else. So I think it's a much more it's a more of a real thing. By the way, I have a chart up on the screen. I'm going to get into that in just a second, which is you might be wondering what that is. It's actually DraftKings DKNG. That's the chart on the screen. I'll tell you why I have it up on the screen. Yeah, again, I would prefer, in terms of, at the end of the day, there's most people watching these things, they have a speculative mindset, and I prefer people would speculate in stocks as opposed to these cryptos or whatever it is. But what, the stuff, it's here to stay. And I think some of these altcoins, whatever it is, the ones that have some vaguely use case, what are they called? Utility. It's interesting. It's interesting what's going on because, like, there's the gaming thing, people playing video games, and they get the coins that they're able to buy things for in game, and they can use those assets, like, I don't know, superpowers, or I don't know, to get sneakers that they could wear inside that video game, in that metaverse, whatever it is. It's just a different reality. I mean, it's real. By the way, that stuff has actually been going on for a while. I'm not a gamer, but I do know that there's people have been able to buy stuff for video games, like the different, like, I don't know, weapons or whatever, for a couple of years now. So now the crypto thing actually makes it much more of a I think the crypto is much more native to the whole video games. I mean, it's much more, it's part of the whole ethos, I guess, if you will. Okay, so anyway, enough about that. We're going to do a quick recap of the year and what's ahead for the new year. So let me just get Okay, so let's kind of do a quick recap of where we were last year, predictions of last year that were correct and incorrect, and yes, change of heart about Bitcoin. I'm flexible. I might be a little bit stubborn, but at the end of the day, I'm kind of flexible. We will be having the hat, the lucky hat. I should probably get the hat. I thought maybe today, for the new year, we're going to do more of a little more serious type of video. Then we'll do the hats later. Okay, so last year, right around the last December, in the videos, I think even starting last November, any of you guys have been following along, one of my big predictions was that, or my investment thesis for 2021 was that we would have a bull, like a run up into late January, early February, which would be like right around the inauguration, after the inauguration of Biden. And then kind of the market would sort of, people would kind of like, there'd be kind of like a euphoria because people had this good feeling, new president. And by the way, I know we have a lot of people outside of the U.S., watching this, but let's face it, the Americans really move the market. So the whole world revolves around America for the moment. Maybe in a couple of years it'll be China, but for the moment, America is driving the market. Although I think China is going to have a major, obviously we have a big headwind. It's going to have a big influence in the coming year or so. But yeah, so the sentiment, my feeling was that the sentiment would be very bullish coming into Biden because people they're happy. Okay, finally we got this new guy, whatever. I know a lot of people hated Trump. Maybe 50% of the country hated Trump, and they voted for this guy, and just to get rid of Trump. And then there's also a lot of people outside of the U.S. who actually thought that this guy Biden is some magic, the guy with the magical powers. But look, at the end of the day, I said this before on the last year. I said, look, this guy, and again, this is not to be political. This is not a political thing. It's just I'm talking about reality here. This is not anything to do with, I'm not here to say, hey, this guy, whatever, Democrat, vote this, vote that. I don't really give a shit, But the point is, whoever runs the country, whoever runs the U.S., it's a very important position because it's kind of like being a cheerleader. The main job of the president of the U.S. is really to be like a like a coach, somebody somebody to make everybody feel good. That's the job. People have done that very well. Ronald Reagan, Bill Clinton. You had those two guys were amazing. Before that, I really wasn't around. But Reagan, Clinton was great, and the other two guys after that were kind of duds. And you can see what happened with the economy. Like Bush, not that great. The father wasn't that great. The son wasn't great. Obama, complete disaster. I know some people, I think he made some people feel good, maybe like left wingers, people in Silicon Valley, the real liberals. However, listen, I do have to say that the left wingers, those guys are actually very involved in the innovation economy. So, it's important that they feel good as well. But I think the problem with I said before with let's say Biden was that the guy was just a stone cold loser, and people would realize he was just this is like the emperor with no clothes, an empty suit, etc. So things would not end well, and it's not just me. It's not just my opinion. Even Osama bin Laden. I think one of the things he said was. Do not, because I think he had he said, do not, did he have, I don't know if he had a hit out. He didn't have a hit out on Obama, but, he was, or Bush, whatever. But he basically said, don't touch Biden. Don't touch Biden because if Biden gets into office, he will be a disaster for America. So, I don't think you can get a better endorsement than Osama bin Laden for Biden. But anyway, I don't mean to be, this is not a political thing, but here's the thing. So my thesis was that people would be very optimistic coming into it, but once the guy was in office, then they would have that buyer's remorse. The buyer's remorse would set in, and people would realize, wow, this guy's a deadbeat. He's not going to change my life. He's not going to, make things better. So now, I was partially right, partially wrong. So the top actually took a little bit longer. We actually had the market top come in mid-February. So maybe I was right. So, you're talking about around Valentine's Day, mid-February into March, you had kind of this, that was really the peak. So I think I said it would be around right after the inauguration. So I was off by a couple of weeks. And I think I do remember that I said that we would see some bargains in the market, real opportunities happen within, around 6 months afterwards. It would have like a bottom out. So I thought the market would actually crash. I thought the whole market would basically kind of collapse right afterwards, and I was dead wrong. That's not what happened. The indexes went up, but the innovation stocks, the emerging growth companies, pretty much a lot of those charts look very similar to what we are looking at right now, which is the chart for DraftKings. And I'll tell you why we're looking at DraftKings. Also, let me pull up Teladoc. So that's Teladoc. And you can see kind of Teladoc peaked right around, there you go, right around Valentine's Day. Same thing with DraftKings. And now, those are big sectors. Teladoc was kind of driving the whole health tech space, which we had two stocks that were in that space, which was CloudMD and Skylight Health. Also Empower Clinics to a lesser extent, and Relic, RHT, Relic Health. Now, the one client we're working with still is Relic, and actually they're doing quite well. That stock actually is at a new, relatively, it's higher than it was last year. Here is the chart for Relic. So, it recently was about $1.32 a couple of weeks ago. We started them at around 90 cents. So this one is actually up in the health tech space, which is unusual, because if you look at what happened with, Skylight, CloudMD, God, I don't even want to pull up those charts, but they look like ski slopes. And I can go into the reasons why, etc. But one of the things, to be very candid, is let me get this. Let me change this around here. There we go. No, there we go. Okay. So, one of the things is that obviously we're here to find those stocks which have the great, massive upside, the next super stocks and all that stuff, right? So essentially we're bringing what I guess in the investment world they call it, alpha, which is, that kind of edge that gives you better, slightly better than market performance. Let's say the index is up 10%, and you have this edge that gives you the alpha of, let's call it, 20%. So now you're up 30%, right? So let's, but with all that said, at the end of the day, if we're going against a very powerful tide, if there's a very powerful current that's going counter to the direction that we're rowing in, we're not gonna move forward. We're gonna kind of, go backwards. So, we've had some the powerful currents, the powerful trends were against the innovation stocks since February. Again, if you look at Teladoc, you look at DraftKings. I'm only using those examples because they're relevant to the health tech, and also DraftKings is relevant to ESC Entertainment, and also Fans United, and Bets, which is, they're coming back, by the way. So so I'm actually very bullish on RHT. So here's kind of, I'll give you an example. So here is the thing that, which I was actually surprised by. I shouldn't have been surprised by, but when there's a powerful trend, a counter trend going against you, it's hard to make any traction. It's hard to get any traction. The ideal thing that we want is, and I've talked about it before in some of the live streams, we want to be kind of like, riding a wave, riding a powerful trend, and you have a great stock that's even growing faster. So you have this, the analogy I use of a fast car on top of a fast train. And that's the ideal setup. Unfortunately, this year, I don't think we've had. I think all the trends in the innovation space were kind of going against you. So it was very hard to make any traction in between. Let's call it February and now. I do think we have actually bottomed out right now. We're very close to a bottom with a lot of these stocks. Um, I'll even use these as an example. Not cloud. No, I'm sorry. So wrong stock here. So let me use DKNG as an example. So DraftKings, right? So again, highly speculative, right? DKNG. Um, it's very possible that we may have a short-term bottom over here. It definitely, you do have this kind of trend line that goes from back from let's call it back from July into here. So you have a possible. Let me draw this. Actually, I'll draw this for you right now. So this is, this right around there is kind of like a short-term support. It's kind of a possible level of support, more or less bouncing around in that range. Of course, it could also drop down to over here, which is around $12. So it's a very possible that this thing could drop into also this range here. So $18 to $12, very possible it could happen. Same thing with TDOC. So TDOC, if you look at it, you have a level of support that goes, we're pretty much, I'm kind of doing like an eyeball thing here. This is not the exact thing, but this gives you the basic idea, right? So you have, this could be the bottom, right? It could be a short-term bottom, and we're going to know within the next couple of weeks if this is the bottom. It's very possible it is. Or it could drop further and we could see the bottom like, I don't know, something like this over here. So here or, here, maybe, So these things are not going to go to zero. It's not going to go to zero, but, it's very possible that, something like a TDOC could drop to, $60. We're going to know if the support holds. It's not a very strong, it's 50-50. I have no like, thing. We're going to know right. But it's below the moving average. So that's bearish. You can see it's below the moving average. DKNG also, also below the moving average. So, again, I wouldn't be, I'm not recommending these stocks, but I wouldn't be going long until they at least touch the moving average or break out of the moving of the 50. This is the 50-day moving average heading upwards. And again, this is so we may see this could be the bottom. And again, this but we're not we're getting close to the bottom. We're getting very close. So whether it's right now or whether it's the next few months, a lot of the emerging growth, a lot of the penny stocks I'm looking at right now, they look like they've kind of bottomed out, or they're very close to the bottom. And let's look at a couple of client companies here, which is let me look up first up is ESE. So ESE. Okay, so it's a stock we introduced last year. Is 30 cents, popped to 450, and it's basically been hold. It's actually, if you think about it, it's only down. Or it's only down. It's down from 450 to $1.30. So it's only what is it 60? It's not as bad as DraftKings or TDOC. So it's actually done halfway. It's not a complete disaster. The stock is holding on. And I think either we've seen the bottom or about to see the bottom. I mean, this thing is not, again, it is below the moving average. I'm not going to deny that. But we're very close to some sort of bottom here, right in this range. And when these things do bottom out, I think we're going to see much, a move significantly higher. For example, look, the fundamentals of all our clients actually have gotten an order of magnitude better than they were last year. ESC is an example. I think the company was doing $1 million in revenue run rate last year when we introduced them, and so they went from $1 million to I think they were 55, 60 million run rate. Let's call it $55 million run rate. That's a 55x, 5,000% increase in revenues. 50 times. It's not 5 times, it's 50. From $1 million to 50 million run rate in a year, it's pretty good. Could a stock like that be trading at 20 times revenues? Absolutely. We've been seeing that, with so many of these stocks. So I think it's just a question of time till this happens. But it does. I think we're kind of in this range where it's going to bottom out somewhere in this like $1.20 range, and then it's going to take off. I'll give you another example here. So let me pull up fans, and we're not working with fans right now. I like these guys. I think this company is going to do very well long term. But yeah, look what happened with fans. Again, it peaked, March 18th, so 6 days after DraftKings, and very correlated to the space. So this thing went from 230 to 40. I mean, I don't know, what is that? Is that a 70%? Very similar to DraftKings. Penn. Let's look at Penn, another company in that gaming space. How do we get this chart? This chart's not working properly. Oh, there we go. Okay. Okay, there we go. My charts were a little bit off. So Penn, this is a real company, right? This is not a penny stock. It's dropped from 140 to 50. What is that? 70%. So, that's what's been going on in the sector. Now, I think that the Penn is actually bottoming out here. And I think this looks like a head and shoulder bottom to me. It's interesting. I wasn't looking at this before the live stream, but to me, this looks like a head and shoulders bottom starting to happen in Penn. You're going to know once it breaks out of the moving average, but this could be a leading indicator because this has been one of the stronger stocks. Let's take a look if there is a support line. The support line would be roughly here like this. Support resistance line. I would say this is one of the major support resistance lines. So if Penn breaks out to $53, $54, where is this moving average? Let's call it 56, just to be on the safe side. That'll be a buy indicator for I think this is the canary in the coal mine. I think Penn is the canary in the coal mine for the gaming space. I will go on record as saying that. I'll try to do that in a little bit. Let me see if we have time. And I'll go through some of the questions that we have here. We got a bunch of things here. I'm happy. I'll see if I can address some of these things. But okay, so let me just kind of wrap up here on what I've been trying to say for 20 minutes. Sorry, it's taken me a while to get to the point I'm making, but the point is this. The point is that I think the emerging growth stocks, the penny stocks in a lot of these sectors are bottoming out right now. And we've seen the bottom or we're about to see the bottom. Let's look at Fans Unite, for example. So we're at 41 cents. It's a stock we introduced September of last year. Yeah, right around here, I think it was. July, no, right here, August. I think it was right here. So August of last year, it was around 20 cents. I think it was 20. It was less than 20 cents. It went to over $2, 2.25, right? It's had a pullback here, and interesting. Look at this action on last week, Friday. This might be the bottom. Might be the bottom. Let's see if we can draw a trend line. Support, resistance. Okay, so it kind of matches up. I mean, this is pretty much it. I mean, you can kind of see what's been going on. This is kind of a longer term support resistance line. The next one is over here in the 60-cent range, 70-cent range. But I think that we have found a bottom here. ESC, you saw that chart. That one looks like it's really bottomed out. I can go through a couple of others. RHT, of course, has done exceptionally well this year. So one point I want to make here is one of the key points I do want to make, which is very important. It makes a huge difference what part of the cycle you get into, when you get into these stocks, right? Like, there was the cohort of let's call it September to November 2020. So those stocks that we introduced between September and November of last year, that cohort had some huge winners. We had Peak Fintech, that's PKK. You had CBDT. You had Fans. You had ESE, and those were all 10x to 50x. You had CloudMD. There was I think CloudMD. What is it? It went up from, it was, I don't know, 4x or whatever. You had a couple of other five baggers, Trip, etc. Red Light Holland, a couple of others that did quite well. And one of the things, one of the reasons why you saw those stocks do well is, what are those things? What do they all have in common? Those charts, when we introduced them, they were all at a bottom. Let me pull Peak Fintech, for example. What, they changed their name now? I don't know. So we haven't worked with Peak Fintech in quite a while, but so we introduced this stock. When was it? I think September 1st of last year. So it was okay. So this is 87 cents after the 35 cents pre-split. So it was like right around here, basically, and didn't do anything for quite a while. Okay. But if you look at the chart, right, the point where we got in was pretty much, if you look at the historical chart, it was, basically here. I mean, it could have been here because, look, I mean, we officially introduced them in early September, but I mean, I was like, we were like in talks for like a month in this period, and this is why I took them on, was because to me it looked like the technicals looked good. I liked the fundamental story, so you had all the odds were working in your favor, right? I like things where the odds are stacked in your favor, and it's de-risked. So, and these charts are very screwed up. I don't know why. Okay, I'm using this trading view now. I'm trying something new here. So this is okay. This is a little bit better. So if you look at it, basically last year, this time, you had a flat chart. You had basically I don't know if it could have been a double bottom in theory, but whatever. Look, it was okay, right? It was okay. As opposed to here's something where we ran into a problem. Um, the stocks that we introduced in February and March, that cohort, that was not the best. Let me give you an example. So, and by the way, I like this company. I like the new CEO. The old CEO. I think they're great people. But the stock has nothing to do. I always say this: the stock has nothing to do with the company. So we introduced Happy in right around here. I think it was basically here. I think it was let's call it 70 cents. The stock ran to $1.25. So you had a 50% increase, right? But after that, they kind of went down. You had some fundamental changes. There was some like CEO, whatever it is, and now we haven't worked with them since August, basically. We had a couple 6-month type of deal. So I don't know what the deal is with them now, but actually the chart actually looks okay now. It looks okay. But actually, this is not the best one. This is the bad one. Let me give you a horrible example. Let me give you the worst example that we've had. And again, nothing to do with the company. This is not, this. I'm just giving you kind of the. Okay, so let me give you the worst. This is kind of the worst performer that we've had this year, and that was Graph Blockchain. Now, I do have to say, every stock, 99% of the stocks that we've introduced, I don't know if it's 99. Maybe somebody's going to go through the track and say, oh, no, it's not 99. It's like 91% or whatever the number is. It's like 90%. 90% of the stocks that we introduce increase probably 50% at the minimum within the first month. Usually they double. Like Organic Garage doubled in the first 30 days. And this is a recent stock, right? But here's an example of a mistake. Look, it's a couple things. I'll tell you, it was a mistake. I don't know if it was a mistake to take this on. It's hard to say. I'll tell you what my investment thesis was. Look, when you're involved with these emerging growth stocks, it's like public venture capital. If you're trying to go for these swings to make 1,000%, 5,000%, you have to realize this is high risk. It's risk reward, right? So you got to be prepared to have a bunch of wipeouts. For every 10 stocks you buy that you expect to have that 10x upside, you should fully expect 3 of them will fully go to zero. We haven't had that yet. We haven't had that type of disaster. But we've had a couple of, bombs. So we've actually done better than expected. But, things revert to the mean, right? So I'm not sure what the exact date is. I'm sure maybe somebody has the date. I think we introduced Graph Blockchain last year at like 19 cents, I think it was. It was sometime in February, I think 19 cents. And now my thesis at the time was this. Now, what I did not like about it, and this is one of the things I did not like about it, was that at that period of time, we were basically, last February, the thing was already up basically almost double from a month earlier. It was like almost the momentum. It was almost a momentum thing happening. Why? I don't know. This chart is not. These charts are kind of screwed up here. But anyway, look, I think the mistake was that we introduced the stock. I like to introduce stocks that are at the bottom. They're at the bottom of the range. We're not chasing momentum. That's a mistake. Every stock that we've introduced, which was chasing momentum, was a bomb. And there was like two of them last year. I know there was Graph Blockchain. There was what's the other one? Another one, and they all came right around that February time period. So and again, because that was the peak of the market, and I wasn't too enthusiastic about it. Listen, one of the reasons why we haven't introduced a bunch of new companies in the last like 6 months or so, and I've probably turned down 15 companies. One of the reasons was, the market was kind of in a downtrend. There was like things were kind of going ski slope, or things were not aligned right. So I didn't want to bring them on. But anyway, so the Graph Blockchain, very candidly, the reason my investment thesis for this stock was, in mid-February of last year, I believed that Bitcoin was going to go to 100,000 by April. That was my thesis. And again, I hate Bitcoin. I hated Bitcoin then. I don't hate it now, but I was. But again, look, I think I was pretty accurate with my Bitcoin price predictions. Otherwise, so let's see. Let's go back to last year. Okay, so February 10th. Okay, yeah. So basically, how do I get this? Okay, let me do it. Why is this chart not working? Oh, shit. Okay. There we go. Okay. I don't know how to use this trading view thing here. I don't know why it's not giving me the where's the rest of the chart? Okay, I don't know this. Okay, so yeah, my thesis last year was that Bitcoin would basically go to about to 100,000. Would have a breakout over here, and it would go parabolic to 100,000 by April. And I was wrong. It went to 63,000 by April. However, so yeah, so the Bitcoin moved slightly off. And again, when I make these predictions, 100,000, the big numbers, you use a grain of salt. So you got to use a little bit of a grain of salt, especially with crazy things like Bitcoin. It's not. 100,000 is not a crazy prediction, because the whole thing is crazy when you think about it. The whole thing is hot air, right? It's all sentiment, which is what makes it interesting. It's trading purely sentiment. Let's see. Yeah, so the Bitcoin actually did pretty well. The Graph Blockchain, I don't know, for whatever multiple reasons, was a complete disaster. But you know what? If we had introduced that Graph Blockchain a little bit earlier, if we had used discipline, we, meaning I take full responsibility for this, for this mess. It would have been at like 15 cents, right in this range, and you would have had a triple. This is the correct price. Look, it's not. A lot of times with these things, it makes a big difference. God, how do you make this thing work? Somebody, what the hell? I don't know. This trading view, this thing is supposed to be like very sophisticated, and it's not working. Okay, I'm gonna stop this trading view here. I'm gonna go back to Yahoo. I don't know. I know it's not whatever, but I think the Yahoo charts. I just like the way they look. I like the way they look, so I'm gonna use that. Stand by. Let me pull up. Okay, let me just use that as an example. I just want to show you because I mean we could learn a lot from mistakes. And again, this has nothing to do. I'm not like knocking companies. I always say this, the stock has nothing to do with the business of the company, whatever. It's the stock is the stock. But the correct time to have introduced graph blockchain would have been right here when the stock was flat, when you had that flat chart, and I would say not even here. I mean, the correct time would have been right in this kind of like, oof, man, a nickel. That Jesus, that was a nickel. Not even over here, not even at this 7 cent range when it broke out. Nickel, that's the point. Maybe 7 cent, 10 cents would have been okay, but definitely not here. And the only reason I did it was, I thought, okay, if the Bitcoin goes to 100,000, all these stocks are going to go parabolic. All the crypto stocks, anything related to crypto, is going to have that high torque, high leverage to Bitcoin, and it was wrong. And well, look, the guys, I mean, the company, I mean, I do have to say they didn't do exactly a super job of presenting the story or whatever. So, and they didn't do themselves any favors. And here we are. It's down 80%. So that's an example. So we've had a couple of failures. We've had a couple of duds. We've had, I mean, I can go through the list of, we've had, 10 stocks up, 1,000, 5,000%. But we've also had quite a few duds, which is a reason why you should read this disclaimer at the bottom that says all these stocks can go to absolute zero. By the way, I should say, please click the like and subscribe button if you're watching this video for the first time. If you want to join our YouTube channel, it is absolutely free. And all that other good stuff. TBP. TBP. Let me give you another example of a bad. Actually, no. This was actually. I have to say, this was actually. Even though the stock is lower right now, I think we did everything correctly here. It was played out properly. In other words, the investment thesis, everything was done right. The market is what the market is. But so it's a stock we introduced last year at, I think, 14 cents. And, great story, big, all the good stuff. And of course, technically, the chart-wise, we were coming in at the bottom of the range, 14, 15 cents. So it was relatively de-risked from that technical standpoint. To me, the charts are very important. Sure enough, the stock pops to 50 cents. So you got a 3x, 4x in a month. So it went from 14 cents, 15 cents to 52 cents in a couple of weeks, right? 4 weeks. Now the problem is, they did a financing when they could have waited, whatever, and there was some. Let's just be real. There was some management missteps during this period, where normally, I'll be very candid. In this case, I will blame the management. and I think anybody who knows the story would also say this, is that, yeah, there were mistakes made that should not have been made. I mean, there was no reason for the stock to be where it is now. The financing, there's no reason why the finance. But again, we haven't worked with these guys since August of last year. Our contract is up, but we did what we could. Basically, I mean, if you look at the chart, I mean, we introduced the stock at 15 cents. It was 30 cents when our contract ended. So you basically had a double, maybe even a triple or a little bit better during that period. But whatever happened afterwards, it was like, I don't know, it was just a disaster. One thing I got to tell you, I mean, and again, I hate to, this is, I know I take a lot of criticism. Some people say, oh, this guy badmouths former clients or this or that. I don't badmouth former clients. I kind of tell you the reality of what it is. If somebody gets upset, if it ruffles their feathers, there's a good reason. It's because their stock is down and they've underperformed. They didn't do what they said they were going to do. They basically, for example, now, there's only two reasons why we don't renew with a company. One is the company may see, okay, whatever, we're not getting value for this, or we don't want to promote the stock. And again, if you look at the companies who've had, CloudMD, I mean, I go through the whole list, but there is one common denominator. What you have seen every single time. Every time a company stops using our service, right afterwards, you see the stocks go lower. Every time. I mean, every time, whether it's, whether we decide not to do or they decide, whatever it is. But once that relationship ends, you see those stocks go down. And I'm not saying it's anything like to do with, it's just, it means one of two things. They either that the company they stop promoting, they're not doing effective promoting, they're doing something wrong or whatever, or in some cases, half the time it could be because, we've done the job, we've been working with a company for whatever period of time it is, 6 months, a year. And, if a stock is up, 1,000%, 2,000%, and we don't see a possibility for it to go up another 1,000%, then there's no reason for us to be working with them, and nothing to do with the company. I mean, it could be a great business. Like, I'll give you an example. Nextech, Entar, last year, last November, I said, hey, we're not working with them. And I think the stock was, what was the stock last year? Let me pull up the chart. So last November, it would have been last November, actually really October. It was October 8th, I think. Right here. This is it right here. The stock was $8. And, basically, and I think one of the first, after hours live streams I did was I say, hey, we're not working with Nextech anymore, whatever, just so you know, because people ask, hey, when is this company going to be on? When is that company going to be on? When are they going to be on next? Well, we're not working with them. So I tell, I got people want to know what's going on. I'm not telling you, one thing I will never say is I've never, ever said, hey, dump the stock, sell the shares, we're not working with them, this company's a scam or this. I've never, ever said that about any client, ever. And I never will. First of all, I think, they're all, good companies, or they have a good probability of making, of being successful as a stock. Even the ones that have been deadbeat, like even GBLC. I think this company could be okay. But yeah, so Nextech. So, I said, hey, we're not working with them at $8. And everybody was saying, oh, this guy, this is. And if you look back on what people were saying on message boards was, Nextech, they're getting ready for bigger and better things. They've moved on from Wall Street Reporter. They're moving to whatever. And it's okay, whatever. I'm not. I wasn't saying anything because I'm not here to whatever. But it went from $8. Where is it now? It went to $1.30. I think Nextech actually could be bottoming out soon. I think this actually at some point it could be another. There could be another run in about 6 months. I think it would be. How about this one? How about CloudMD? Right, here's a disaster. I'm actually very disappointed in CloudMD because this should have been like a $5 stock. So we introduced this last July 31st, right here, literally the bottom. And if you look at the chart, it was a flat chart. Everything was perfect. So it went from 63 cents to $3. So it was a 5-bagger. And, our deal with them ended last January. And this is a company I wanted them to continue. I was kind of disappointed that they didn't want to continue using our service because I think they were doing very well and they needed the promotion. It would have been very beneficial. And they completely stopped promoting. Look what happened. Look at the volume from the time they started with that. So we started the promotion here. Look at their volume. Look at the stock. Everything was going well. And of course, it continued the next month or so, which is normal. These guys have done nothing for the last 9 months. And now the stock is $1. I mean, it's ridiculous. Let's look at Skylight, SLHG, another example. Let me look at SLHG.V. Why? Okay. So we started with them last November, I think. No, December, I think it was. No, I don't know. Right around here, I think it was. Let's call it 330. I mean, pre-split, so it was like $1 or 90 cents. It was around here, like $2.53. So $1 roughly, pre-split. Basically went to here. So you had a triple, and you had a bit of a pullback. And again, if you look at this compared to CloudMD to a TDoc, Teledoc, the thing actually held on pretty well. And then they decided, we're going to go on NASDAQ. We don't need to use, we don't need to promote retail, whatever. Okay, now I'm supportive. I had some options. Whatever. I'm kind of actually underwater in this thing. I'm a little bit irritated at this point, but you can kind of see what happened. So I do think this is kind of we're near the bottom here, or at least I'm hoping it's the bottom. I'm hoping because I'm actually underwater with this thing right now. This is a complete fucking disaster. But the point is this, during the time when we're promoting these stocks, they do usually quite well. But let me say this, going forward into the new year, I'm sorry, I got off on a tangent. What was the point I was trying to make? What was the point? Oh, I think somebody distracted me with this. There we go. Oh, TBP. Yeah, I think okay. The TBP guys distracted me. I'm sorry. Blame it on Maury and I don't know. Blame it on these guys. It wasn't me. Don't blame me for going off on a tangent for 10 minutes. The point is this. Here is a very important point. And here it is. Going forward into the new year, right? The game plan for 2022 is this. I think we're going to see some bottoms coming in right now. I think this is going to be very good entry points right now. Because a lot of these stocks I'm looking at right now as potential clients to introduce in 2022, and I got a pipeline of companies I'm looking at right now. I'm only taking on stocks that have those bottom charts, so they've basically been de-risked from that technical standpoint. And that's the big lesson I learned for 2022. That's the takeaway for 2022. And we'll go into this one in just a second. So takeaway for 2022, only getting into, introducing next super stocks as stocks at that bottom. And number two, and this is for you guys, you will never hear me say this, but again, we're looking for those stocks with that 10x upside. That's the game plan, 10x upside. But it never hurts to take a profit. And I don't think, I don't think in the next couple of months we're going to have these massive, like what we had. I think a lot of people got spoiled by what happened last February to December. Last November to February of 2021, which was, we had like a bunch of stocks that went up 10x in 5 months. CBDT went up 50x in like 4 months. ESC 10x. Fans Unite 10x. That's not going to happen in 2022. We're not going to get those parabolic moves right now. I think it's a much more selective market, and things are reverting to the mean. And this is the big trend, the big theme. So the key to making money is going to be to go for those doubles, triples, 5x's. I'm pretty sure we're going to have a few 10x's. But it might only be like, it might only be a few. It might only be like 2 or 3. It's not going to be 10 like it was last year or whatever. It's going to be a few. But there's going to be a whole bunch of doubles, triples, and quadruples. And the key to making money is going to be to grab those doubles. So when we introduce a stock and it doubles in the first month, you got to decide for yourself if it's time to take a profit or what. But I would say in the current market, it's just a very choppy market we're dealing with right now. I think it's bottoming out, but it's very choppy. The tide, the current is still going against the growth stocks. If you look at the charts I showed you, whether it was TDOC or DraftKings, it looks like they may have bottomed out, but those charts look like ski slopes. They look like very similar to our stocks. So the key is going to be to, take the money and run. When you see doubles and triples, in many cases, I think. Okay, yeah, I think Visby is actually going to do quite well. I think it's at least a $5 number on that stock. Okay, so bottom line is the big theme for 2022. After an hour, I'm getting to the point. Sorry, I got distracted multiple times. The big idea is this: crypto, I think, is going to be a massive theme. Anything crypto related, crypto is going mainstream. I mean, it's going mainstream when I'm talking about crypto, like wacky things like Phantom and Mana and Sand, which I've done on a couple of live streams but I do it not on the Wall Street Reporter channel because it's a little too. No, I do it on the Pennystocks Billionaire Gang channel and also the TikTok. On TikTok, I think I did a thing on and those actually, I hate to say it, but I've actually been very accurate on those things. I don't know how to make money with them in terms of like, I'm in the promotion business. I mean, like, I don't know how to make money with those things. They're not paying me to promote them. So, but yeah, they're interesting. I think they're interesting trading vehicles. So the big theme, crypto. Theme number two, we're still in a choppy market. So you're gonna have to go for, doubles and triples. Don't expect 10 baggers, like massive 10 baggers, everything. There's gonna be a bunch of doubles and triples. Take the money and run, in many cases, and then parlay that into the next deal. It's just a different market. I think it's going to bottom out in about 6 months. We're there now, could be, but but just it's going to be it's just what it is. Okay, so number two. What's number two here? Yeah. Okay. So let's talk about a couple of our current stocks. Yeah, there you go. So gaming crypto. Yeah, I think this is interesting. Yeah, there is these cryptos are very, very interesting. And actually, we're going to be introducing a crypto related deal shortly as a stock. It's a penny stock. Okay, let's go through a couple of our mega super stocks that we're working with right now. And again, we're going to be introducing a couple of new stocks very shortly in the next few weeks. We're going to have a couple of stocks in the pipeline which meet all our criteria for 10x upside. But definitely, at least they'll double. I'm pretty sure they'll double in the first 30 days. Okay, so let's go. Let me pull up our most recent super stock, which is Organic Garage, which we introduced 30 cents. It basically doubled in about a month. It went to 70 and change. And what's going on now? I think this is going to be one of our big winners. I'm certain this is going to be a $255 stock. In the meanwhile, what is the short-term action? If you're a subscriber to our Telegram channel, you would have gotten all the inside scoop on Friday and Thursday with the earnings or whatever. I can go into the earnings and all that stuff. People were not that impressed. Couple of issues. I think they had one of their stores was under renovation for a big part of the year. They had the COVID thing, I think, threw things into the comps got screwed up because maybe people stocked up in the early part, they were buying less, so this or that, whatever. Anyway, the reality is that this story is really about two things: store expansion, which they're going to be doing in the next couple of months, meaning they're going to go from 4 stores to maybe 8 in the next couple of months, and also the plant-based foods, the future of cheese, all that stuff. I'm not going to go into all the reasons. There's a whole thing we did on the fundamentals of exactly what they need to do to get to a $5 price. It's all there. I'm just going to talk about the chart right now. So on Friday on a Telegram thing, I said in the morning, I said, hey, this thing is probably going to touch 42 cents today. And sure enough, it did. And I did say, yeah, it was turning around during the day. It could go to 46. That would be very bullish if it goes to 46. So I had a nice bounce during the day. 45 cent bounce to 45 cents. But what is going on right now? So I think either we've at the bottom of 42 cents because you have a kind of a long-term trend in that 42 cent range. Let me draw this here. So I got a couple of trend lines happening here. You get a couple, the blue line. Should I change it? I don't know if you guys can see that. Can you see that? Yeah. So we have basically, so you got big support in this kind of 42 cent range here. I don't see this thing going any lower. I think we're going to bounce around here for a little bit. And it's got to make a base in this range. I think we're going to make a base in the 45-cent range, break out, and then it's going to go to $1.25 later next month. That's my prediction. Listen, this stuff with the fins was, here's the thing. When it comes to these penny stocks, emerging growth stocks, you're not, the financials, all that stuff is like irrelevant. It's completely irrelevant because you're not doing things where there's like comps or this, where you're not buying for incremental growth. The idea of financials, like, oh, are they up 20% over the quarter? That matters for companies like Apple, for any established business. For an emerging growth stock, there's only two things people are interested in right now. What are they doing that's going to be what's going to be the game changer? What are they doing to go to 10x? And these guys have it. They got the doubling the store count, all the other stuff, the organic food. So yeah, that stuff is not relevant. Yeah, so I think, look, I think ultimately, you're going to have organic garage is going to be a minimum $2.50, most likely $5 in the next 12 months. I am fairly certain of that. I mean, it's got everything going for it. ESE. Let me go to the 1-day chart here. What's going on? The chart's not cooperating. Okay, here we go. Yeah, so ESE is kind of bottoming out. I mean, it's lost a little bit of momentum in the last few weeks. I don't understand it. I really don't. It's bizarre to me because, ironically, the fundamentals here are like off the charts. I do think we are kind of at a short-term bottom here. I mean, I don't think this thing is going to go any lower. It's just kind of, I don't know, just churning here. Doesn't make any sense. I mean, it's like going sideways, like right now. It's churning. At some point, it's going to decide to go up. I think we're going to see crazy numbers on this, in excess of what we saw. So, once this thing starts moving, it could be an $8, $10, $12 stock once it gets moving again. The trend is still up. It's just been building a massive base. I mean, look, you have a massive base that's been building for the last 9 months. 9 months. So, maybe this is it. This is the bottom is right around now. So ESC, I'm very bullish on. I think we're going to see it. Basically, that's a 10x from here. OG, I believe, is a 10x. Let's take a look at a couple of others. Logic. Infamous Logic. And I think I said we're at a bottom at 250 or something like that, and here we are at $1.50. But if you look at the long-term chart, this actually is, it's actually $1. What was the number? I think it touched $1.85, but yeah. So this is like a massive double bottom. This is what this is. And once it starts moving again, look where it's been before, $15, $16 or higher. So I think we're going to see some great things. And by the way, if you look at the chart, you actually have a key reversal going on Friday. So we actually had a bunch of stocks on Friday that had upside reversal days. So this is actually pretty bullish. So I know the chart looks like a ski slope, but let's see what happens this week. I think we've seen the bottom there. Let's go to Visby. Yeah, so Visby, the long-term trend is up. It's been consolidating here a little bit. Nothing here to worry about. Actually, Fridays actually look pretty good. We're going to see what happens this week. Watch this moving average. If we see a significant close above, let's call it a buck 20, buck 25, you have some resistance in this buck 25 range. Once it breaks out of that, that's going to be a massive buy signal. So if anybody's on the sidelines for Visby, I would say wait till it breaks out of $1.75. Yeah. Yeah. By the way, I absolutely organic garage. I absolutely believe can double or more. I think the next move in organic garage is going to be a new high. It's going to break out from 70 to like a buck 20, buck 25. So yeah. Yeah. Again, the thing that I love about organic garage is it's a de-risked story. You have like, I don't want to say zero downside, but you have a company that's trading at like a private market valuation for what it is. Um, it's like where there's no downside. So once the downside is eliminated, the upside takes care of itself. By the way, if you're watching, make sure to click the links in the video description below to join our Telegram channel to get our telegrams for real-time market commentary throughout the day, and also click the like or the dislike button if you don't like what you're watching. Just click something in this video to get the algorithm going. That would be great. Okay, what other stocks we got cranking here? Liquid Avatar, I think, is going to be one of our big winners of 22. It's a company in the metaverse space that had some tremendous financials. Impressive numbers they came out with a few weeks ago. And if they could maintain that in terms of, with, the NFT, digital land sales, all that stuff, this thing can go crazy. This thing could be $1.25 stock. So that's Liquid Avatar. RHT. Again, RHT this thing is setting up for very easy double or triple. And look at this. The chart is beautiful. I mean, you got this nice uptrend. I'll draw you a little thing here. Here we go. We got a couple of trend lines going on. You got this guy here, which is, wow, really accurate. Look at this. That's your main trend, and look how accurate this thing has been. And I just did it from here. I mean, it's incredible. So you get this uptrend line. Let me do another one. There is like your resistance line for now. It's going to become a support line at some point. But I think this thing is going to just go in that channel unless it breaks out. So it's just going to keep going up. I don't know. I mean, this is pretty obvious what's going on, right? I mean, like, you don't need to be a rocket scientist, but yeah, this thing is very bullish. And right now is actually a very good entry point because you're coming in right as it bounces from the support, and it's going to break out of this moving average. That's what it looks like. Tomorrow in the US, later this week, it's going to break out. And you know, it's already on the 1 hour chart, the short term, it's already out of it. So you're gonna have some resistance in this like $1.20 range. And if it breaks out of this channel, it goes to 250. So we gotta watch the velocity, what happens there. Yeah, I gotta get. I really, I'm shocked that I don't have 100,000 subscribers. I mean, there's like morons. There's morons on YouTube who have millions of subscribers. I mean, it's this goes to show you this is this channel is not for morons. We're not here for the masses. This is for people of sophistication and taste. Very limited. This is for the 1%. This is not for the masses, the millions. This is for the 1%. That's why we only have 10,000 subscribers and not a million. It's the 1%. Yeah, so GazX. Interesting. So GazX actually is not a client right now. It's a former. I mean, we did a short-term thing with them. The great people. I mean, I said this from day one. This is like the A list, the A team here. Those guys have a massive track record, and I'll do the 1 day chart. And this, ignore this trend line. This is like from somebody else. There we go. Yeah, that's out of this chart script. Yeah, so this stock broke out on Friday, brand new high. And we introduced it last March, I think it was. March? February? I think it was February. Somewhere around here. I think it was around here. I think it was kind of like around here in this range, maybe. $1.50, maybe $1.50. I think it was. I think it went up. It didn't really do anything, and the market was kind of rough around then. So, and then it dropped. It went down, and there you go, bottomed out. And now it's making new high. And again, the guys have a massive, massive track records there. What I didn't like about the stock, to be very honest with you, is the timing of it. Again, if you look at it, we came into it, $1.50, which was already, a breakout on the way, look, way high. I mean, the time for really that where I like to get in is in this range when things are flat. So the correct timing would have been at 30 cents. I mean, that's really the point where normally, but I didn't know about the company. Nobody brought it to me. That's so. What can I tell you? Yeah, I mean, I like the charts that look like this. That's when I like to get in. So the next stocks we're going to introduce, they're going to look like this. This, nice bottom base foundation, whatever you want to call it, double bottom, whatever it is. I just like that level where something is de-risked. And again, you want to see something that looks very similar. Logic. And it's done it before. Like we introduced it last year at $3. It went to 12 and a half or 14, 12 and a half. So it was a 4-bagger in like 2 months. And I'm very certain it's going to go back to $12 this year. So, hang on. Okay, the internet is a little bit frozen for now. Listen, anybody who buys any of these stocks is automatically a penny stock billionaire. Yeah, possibly, yeah. So GazX, yeah. I mean, I like the GazX. We're not working it, but yeah. Okay, so here's another example. Delic. So Delic stock we introduced last year in the psychedelic space. We had a winner. Trip was actually a winner for the short time. So we introduced Delic here in, I think it was January already. I think the stock was 50 cents. And it was, here was the mistake. Quite frankly, the mistake I think I made was, we got involved with it right in the early stage when there was no like historical track record or anything. And yeah, it popped. It went from, I don't know, let's call it 50 cents to 80 cents. So you had, 50% gain, big deal. And then of course, things peaked in February, and then it dropped to where it is right now. I think this thing is going to build a bottom in the next couple of months. I think the psychedelics are going to bottom out, like Red Light Holland, all the other guys. So Trip. Trip was actually, I think we got it a little better timing wise because it was coming off of a base. So here was the base. You had a base in roughly 11 cents, 7, 10, 11 cents, whatever it is. And we got into it at 13 cents. We introduced it. So it was good. It was like right to break out of the base. Very good entry point. And the stock went to, 50 cents right away, like in a couple of days, and then to 70 cents. I got to tell you something. I think that this thing would have gone if they would have kept their foot on the gas pedal, promotion-wise, a couple of other things. It should have gone to $1. This thing should have gone to $1. And unfortunately, they took the foot off the gas. They stopped promoting the stock. Our contract with them ended. I don't know, what is it? May. I think it was May or June. So pretty much here. 33 cents. So basically it was a double while we were involved, and then it's been kind of drifting. It's almost like a ship drifting in the ocean with what do they call, like a ghost ship? Those ships where there's no the motor is not working or something, or the crew is dead. Nobody knows what's going on, just floating in the ocean. But it's like a ghost ship with gold inside. There's actually value there with red light. So I think it's going to come back at some point. Yeah, I think Delic is going to come back. I think Trip is going to come back. $30 for Visby by 2024. Wow, that's a long time. Let's just look for $5 short term. Let's see. So peak. Listen. Okay. So let me go back again. I don't want to get this thing where I'm not like bad mouthing companies and all that. Like, I don't want to get people like saying, "Oh, this guy's bad mouthing former clients," blah blah blah. No, I'm just telling you, kind of reality is, the whole game that we're in. It's not about the fundamentals, really. It's not. It's not about the financials. It's not about the fundamentals. It's about perception. It's about perception and opinion. What we're doing is we are trading perceptions and opinions because we're buying a stock at a price where we think that the perception of it, the opinion of that industry, that sector, or this or that, is going to change in a few months or 6 months, and it's going to be something different. It's going to be more value, etc. That's what we talk about. Buy the rumor, sell the news. Buy the rumor, sell the news. You want to get into these things when you want to get into these stocks when nobody likes them. You want to get into them when people doubt them, when you have, what is it, FUD, fear, uncertainty, and doubt. You want to get into them when there's fear, uncertainty, and doubt. Like Organic Garage. Organic Garage, I mean, I'm shocked that that there's people who actually think that this thing is, they have fear, uncertainty, and doubt of that stock, or a couple of these others. But yeah, I think that like that one has very vocal haters, just like Peak FinTech had very vocal haters, like CBDT had vocal haters, and those stocks, Peak went up 20x, CBDT 50x. We're going to see the same thing with Organic Garage. But anyway, look, I think I told you guys back in right around here, early September, I said, hey, this thing might go to $14. It might even go to $20, very possibly, but that's it. It's gonna, it's, the move is done. The move is over. It's not gonna keep going to the moon, because look, you have at $14, even 12, it was $1 billion market cap. A CSC company, it can't support $1 billion. It just doesn't work that way. That's done. That's it. I mean, whatever you think about it, could be a great business, but the business is not the stock. The stock is not the business. They're two unrelated things. I mean, the move in Peak is over. Actually, I like this action on Friday. It's not bad action. Might be a short-term bottom, but I think it's pretty much done. I think we're going to see this thing heading back to, shit, I hate to say this, this $4 range, maybe even lower. I mean, the move is done. It's over and it's done. You got to move on to the next thing. You got to get into these things when nobody likes them. I did a video that's up on YouTube. I think, is it up on YouTube? I did a video on the Pennystock Billionaire Gang channel where I talk about buy the rumor, sell the news. And the Jonestown Kool-Aid. I think that video is up on our Pennystock Billionaire Gang channel, where I explain exactly how this thing works. You got to get into them when nobody likes them, and you got to get out of them when when Jim Jones tells you to go to Guyana and start drinking the Kool-Aid. You got to, when they start passing out the Kool-Aid in the jungle, you want to get out of there before the Kool-Aid gets started. You want to you don't want to go to Guyana. You want to I talk about it in the video. It's Guyana, Jim Jones, all that stuff. But you got to watch the video to get the reference. Bottom line, I think the move in Peak is done, and you got to find the next winner. I mean, 20x, you're up 20x. That's not enough for you? I mean, come on, man. Yes. Lisa will be back this week, I think Wednesday. Yeah, this chart is looking amazing. I mean, I think Relic is going to have a massive year. I mean, I don't think it's going to go to $10. I think this is going to be like a, $4 or $5 stock. Maybe, yeah, I think it's going to be $5. I don't think this is going to be a $10, $20 stock this year. I think it's going to be basically a $4 or $5 stock. I know it's shocking for anybody watching this for me to say anything is going to be less than a 10 bagger. But look, I mean, we're getting into it a little bit kind of late in the game here. But we're getting into the, the good part of it. So yeah, I think it's gonna be a $4 or $5 stock. Are you new to the stock market? Yeah, man. I just learned about it, and yeah, I'm really excited to be getting into learning about the stocks. Yeah. So yes, so ESC. We're gonna have ESE on hopefully this week. I'm looking to get updates with everybody this week. Again, this Game Addict acquisition for ESC was I think, a game changer. I mean, 25 million in revenues, 5 million operating. Was it income? It's huge. It's going to be huge. This thing is going to be, it's like this is like a ESC is basically a $10 stock right now that you're getting for $1. Okay, to recap. Yes, we're here to join the journey, the stock market. Russell, yeah. It's interesting. I tell you, the index, it's so weird. I don't want to. It's like it's hard to tell what is going on, man. It's hard to tell. How do I get the fucker? What is this? It's really hard to tell. I don't know what the answer is. I wish it's the problem I have with this type of market, with this chart, is it's really not clear. My bias is that it's going to be an upside breakout, but we're below the moving average. I mean, it's kind of. I'm biased to say it's going to break out of this range, and it could go significantly higher. I mean, if it breaks out of this range, you're talking about it'll go from 2,200 to 3,500, 4,000. I mean, that's kind of the next level here. Let's look at the 1 week chart. Here's what I think. Actually, here's my thinking is what's going to happen. This is like it's very difficult to say. Like the market, it's like the chart. It's not a really super clear chart. They're all kind of upward trending. But I think there is a very good chance. The big theme is that I think a lot of stocks are kind of going to bottom out in the next few months. Like a lot of the micro caps are going to bottom out. The stocks we're looking at, they're going to bottom out in the next few months, like the DraftKings, Teladoc, and that's going to, all the other things in the sector. And we might see a blowout, major new highs in markets towards the end of the year, and then things will just go completely off the rails for 2023. And you'll have a big market crash. Everybody's talking about a big crash, and I think it's going to happen a year from now. I think it's probably going to happen because I think the bubble is just going to go crazy because the cryptos. So my thesis going forward to the year for 2022 is that the cryptos are going to go mainstream. There's going to be massive speculation, and the bubble is going to keep inflating. And a lot of the micro caps, which have been beaten up in the last 9 months, last year basically, they've bottomed out. They're going to pick up. So we're going to have kind of this like weird rotation. But the market is not going to crash until everybody's in and everybody's drinking the Kool-Aid, like the Jonestown thing. I don't think enough people are drinking the Kool-Aid yet. I mean, there's people in the general economy. There's definitely a lot of Kool-Aid, but I think things are going to go to an extreme. They have to go to an extreme. They got to go really to an extreme. That could happen sooner, but they really need to go parabolic and extreme, and that'll be the thing. So so I think actually things are actually looking. We're in a pretty good setup, but I think the game plan for this year is going to be more while we're looking for the big 10x gains, you know, make sure to take profits when you get those, 100%, 200%, because I think it's going to be relatively choppy. And, there's not that mean, you may have another year left into this blowout. So we'll see. It's again, it's kind of, yeah. Yeah, if you again, yeah, they're well, if they lost, if they sold, I get the you only lose if you sell. Yeah, so if you look at, I think the most like emblematic thing, if you look at, DraftKings, I would use as kind of the example of, which is a bellwether for a lot of the stocks in there, like sports, esports, sports betting, Teledoc for health tech, etc. But yeah, so if you look at that, I mean, these things went from 70 to 27, so that's 50%, 60% correction, and that's in many stocks are down 50, 60%. So I think a lot of these things could bottom out. I mean, look, we're going to see. I think we'll have a better idea of what's going on in the next 6 weeks. By February, March, I think we'll have a clear idea of some trends. Right now, it's a little bit, a little bit uncertain. Market needs volume. Yeah. Well, yeah, the micro caps, we had a couple of weeks, the seasonal, it was a little bit, everybody was off for Christmas, New Year, and all that stuff. Okay, so let me see if I can answer any questions. Okay, answered that one. Logic we talked about. Yeah. So, okay, so this is Tejas, I think I don't know if that's how you pronounce the guy's name, but yeah, so this was the investment thesis for TBP is the great fundamental story. I mean, if these guys, if it works, it's a couple dollar stock. You had a 20x in there. If it doesn't, it goes to zero, right? Or not zero, but it can go to a nickel, whatever. So right here, I mean, it could be, I think it's a lot of it has been de-risked. It might drop a little more. It's very, very possible. But again, the thing there is if they actually do what, people think they could do, it's a massive winner. So, yeah. So, but the last thing is correct. Do not go all in. Don't put all your eggs in one basket is the thing. Some winners and losers. Yeah. So this year, there's definitely been a very choppy year. We've definitely had a number of winners and losers. I think realistically, though, I mean, I don't have. I need to get a spreadsheet going, but I would say 90% of the stocks we've introduced all went subsequently higher in the first month or whatever it is. So everybody had an opportunity to make 50% to a double, even for the losers that ended up going down 70%. But in terms of stocks that you could expect to be a 10 bagger, I would say normally speaking, the way things normally work is that if we introduce 10 stocks, we can expect that 2 of them will be 10 baggers. Just 2, not 8 or 5, or like last year where the numbers were crazy, right? You're not going to have 5, half of things be 10 baggers. Normally speaking, with kind of the model that we use, out of 10 companies introduced, 2 will be 10 baggers. You might have 3 that'll be up 4x, 5x. A couple will be maybe a little bit, and then you should fully expect that 3 of them will go zero, right? So it's probably not going to happen right away, but yeah, that's kind of the distribution that you can expect. So let's see. ESC Nasdaq. I don't think it needs Nasdaq. I don't think these stocks need Nasdaq. I think they could do very well just where they are right now. Yes, so we're going to have a couple of new stocks to be introduced the next few weeks. We have a pipeline of some interesting stocks. I think it'd be very exciting. And I will leave it on that note. Stay tuned. So we're going to have some live streams this week. We're going to have Relic. I think we're going to have a couple other guys on. And that's it. I think let's hope for a positive 2022. Thank you everybody for joining. I'll see you in the next live stream. And again, make sure to press that like or the dislike button, whatever you feel like, and join our Telegram channel. Click the link in the video description below to join, and also for our Twitter, TikTok, all that other good stuff. Okay, thank you. I'll see you all later in the week.